An overseas market rises about 20% here in local terms, yet your account, measured in dollars, shows only about plus 8%. What just happened? The foreign currency itself got cheaper against the dollar. Same idea as a raise. If your pay goes up 10%, but the coffee that used to cost $3 now costs $4.50, your real purchasing power barely moved. The stocks or ETF may have been strong, but a weaker foreign currency or a stronger dollar delivered an FX loss you never see on the price chart. That is today's hidden variable. We will measure how large that FX swing can be, how to calculate it, and whether you can really hedge it away. Useful whether you are a U.S. investor overseas or a non-U.S. investor holding S&P 500 NFX names. Take the International Developed Market tip on screen, EFA, as a stand-in. Suppose you buy a slice worth $10,000 when the Eurozone is your main exposure and Eurist is 1.10. In dollar terms, your cost basis is simply $10,000. That is real cash out the door at your broker. 6 months later, the local stocks are up about 20%, so the foreign currency value looks like $12,000 before FX. But Eurist has slipped to 1.00. The euro fell roughly 9% against the dollar. 컨버트 100. about 달러 12,000 곱하기 사인 1.00, 1.10, 근사 달러 1,900. 유어 달러 프로핏 is only about 달러 900. 오르 러플리 플러스 9%, 나 더 플러스 20% 더 로컬 차트 애드버타이즈드. Bottom line, the equity sleeve rose as a 20%. FX subtracted nearly half of that in dollar terms. Historically, swings of this size show up again and again when the dollar index, DXY, trends hard. Now flip the camera. On screen is the Nasdaq 100, the growth gauge many global investors use. Imagine $10,000 of unhedged international equity beside a U.S. sleeve for comparison. 시나리오 A. 유크 달러 포린 스톡스 플러스 15%, 옌드 포린 커런시즈 올소 라이즈에서 10% vs 더 달러. Your dollar total can land near plus 25%, equity gain plus FX gain stacked together.
시나리오 B. 스트롱 달러 세임 포린 스톡스 플러스 15%, 버 포린 커런시즈 폴에서 8% vs 더 달러.
FX subtracts, and your dollar result may shrink toward the mid-single digits.
시나리오 C. 오프세트 포린 스톡스 폴에서 10%, 옛 A 사오플리 유커 달러 리프츠 도즈 커런시즈에서 15% vs USD.
Equity pain can be partly offset. You might even finish slightly positive in dollars. Core idea. Equity return and FX return are separate engines. One can rescue you, one can punish you, and sometimes they cancel. Fed rate paths and DXY trends are why this pairing matters for anyone crossing borders. Good news and friction. Buying a U.S. name like NVIDIA inside a U.S. brokerage in dollars is usually clean. Crossing currencies or owning foreign shares adds costs the chart never prints. First cost, FX conversion. Retail brokers often bake a spread into the rate when you change pounds, yen, or euros into dollars, or the reverse. Even a 0.5 to 1 cent round-trip spread on a $10,000 ticket is real money before the stock moves a tick. Second cost, tax principles. U.S. persons generally owe capital gains tax when they sell. Long-term holdings often get preferential rates versus short-term trades taxed like ordinary income. Foreign dividends may face withholding abroad, credits or deductions can apply, but the paperwork is yours. Non-U.S. investors holding U.S. stocks face their own stack. Home country capital gains rules plus possible U.S. dividend withholding, treaty rates via W-8 Ben matter. We cover cross-border tax in more depth in a later lesson. Do not treat this as filing advice. Worked feel. Abarla 10,000 buy that exits Attila 15,000 looks like Attila 5,000 chart win. After FX spread and tax drag, the cash in your pocket is smaller.
오로이즈 서브트랙트 코스츠 인디스 오더 마켓 P&L 그러면 FX 그러면 피증 스프레즈즈 그러면 텍스.
Disclaimer, tax law changes. Before you invest, confirm current rules with your broker and a qualified tax professional in your country. A currency hedge is insurance. You offset the loss you would take if FX moves against you. Leaving FX open is like owning a house while prices swing. Hedging is closer to agreeing the sale price in advance. Mechanics. You hold international stocks or an unhedged ETF and separately lock a future FX rate with a forward or currency futures, or you simply buy a currency hedged share class of the same index. SPY on screen is the US yardstick. Hedged international ETFs try to keep the equity move and mute the currency move. Worked example, Arlo 50,000 in unhedged foreign equities. You hedge so that 3 months from now you convert back near today's rate. If foreign stocks rise 10% but the foreign currency falls as 8% versus the dollar, the unhedged path gives up most of the equity gain in USD. With a working hedge, you keep much more of that as 10% equity gain in dollars. The FX hit is largely neutralized by the hedge P&L. Result: the stock return stays more visible, FX noise drops, and your dollar outcome becomes more predictable, not more exciting. Hedging looks clean until you price the insurance. Hedge cost varies by broker and product, but educational ballparks often land around 0.5% to 2% per year, baked into forward points or a higher TEP expense ratio. Cost sketch. You hold below 30,000 of international exposure for 6 months.
1에서 1% PER 이어 6 months cost about 0.5% roughly 달러 150 여더 마우키츠 코어퍼레이트 오르낫. 시나리오 A2 FX 허츠 포린 에쿼티즈 플러스 12% 커런시 마이너스 5% vs 더 달러 원헤지드 근사 플러스 7% 예서 달러 2100 헤지드 근사 플러스 12% 마이너스에서 0.5% 코스트 근사 플러스 11.5% 예서 달러 3450 You paid the premium and kept more of the equity win. 시나리오 B FX 헬프스 에쿼티즈 플러스 10% 커런시 플러스 8% vs 더 달러 원헤지드 근사 플러스 18% 예서 달러 5400 헤지드 근사 플러스 10% 마이너스에서 0.5% 근사 플러스 9.5% 예서 달러 2850
You muted the helpful FX wind and still paid for the hedge. Takeaway: a currency hedge is disaster insurance against FX, not an alpha strategy. Decide how sensitive you are to dollar swings and whether the annual cost is worth the smoother ride. 3 hidden variables from today. 1. An FX move near plus or minus 10% can roughly halve, or double, the equity story in dollar terms. 2. Spreads and taxes mean chart P&L is not cash in pocket.
3. Hedging is insurance, 오픈에서 0.52% 기여. Not a profit engine.
Decision frame. Multi-year horizons often let currency cycles wash out, so many long-term allocators skip a full hedge. If you need the money inside a year and a big FX hit would hurt, review hedged share classes or a partial hedge. 3-step check before you celebrate a cross-border sale. 1. Equity return. 2. FX move versus the dollar. 3. Spreads and tax drag. That order closes the gap between what the chart shows and what you keep. Disclaimer: this lesson is education, not a recommendation. You own every decision. Watch DXY beside SPY and your international sleeve to see how often currency, not just the Fed headline, rewrote the dollar score. Next, allocating across US and emerging market assets.
Thank you.